Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
through the global commodity markets.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Surging spot prices for liquefied natural gas (LNG) are exacerbating a gas supply crunch in key fast-growing emerging markets in Asia, just as a cold spell in other parts of the region boosts demand for the fuel. Companies from Pakistan to China have cancelled a flurry of LNG tenders this week, several trade sources said, as lofty prices risk pushing up the input costs of industries, which could make energy more expensive for consumers. Benchmark Asia spot LNG prices (LNGs) have soared sevenfold since May to six-year highs, driven by production losses in Australia, Malaysia, Norway and Qatar, combined with accelerating use in China, India and elsewhere.
Asian refining profits for gasoil have hit 4-1/2-month highs on recovering demand led by China and India, though analysts warn that rising shipments from those and other exporters may curb further gains. Refining margins, also known as cracks, for the benchmark 10 ppm gasoil grade in Singapore have surged 42% in the last month, but remain 54% weaker than their historical average for this time of year, Refinitiv data showed. Revived transportation and industrial activity in China and India since September have helped boost gasoil market sentiment, curbing Indian fuel exports and tightening regional stocks.
Moving on to the top news in the energy sector.
Oil climbed to a 9-month high on Thursday after government data showed a fall in U.S. crude stockpiles last week, while progress towards a U.S. fiscal stimulus deal and strong Asian demand also buoyed prices. The U.S. dollar set a 2-1/2-year low against major rivals on Thursday, which also helped oil because crude priced in the greenback becomes cheaper for buyers holding other currencies. Brent crude futures were up 22 cents at $51.30 a barrel by 11:10 GMT, having traded as high as $51.90.
Saudi Arabia's crude oil exports rose for the fourth straight month to 6.16 million barrels per day (BPD) in October from 6.07 million barrels of oil per day in September, official data showed on Thursday. The world's largest oil exporters' total crude and oil products exports rose again month-on-month by 281,000 barrels of oil per day to 7.38 million barrels of oil per day, the data showed. Saudi domestic crude refinery throughput rose by 2% to 2.4 million barrels of oil per day in October, while direct crude burn dropped by 224,000 barrels of oil per day to 391,000 barrels of oil per day.
Moving on to metal price moves.
New standards for steel scrap in China will come into force on January 1, 2021, the country's market regulator said, giving mills in the world's top metals consumer more access to the iron ore substitute even after it bans imports of solid waste. The standards for what is officially known as recycled iron steel raw materials broaden the range of steel scrap that can be imported and adjust the maximum content of harmful impurities such as sulfur and arsenic, according to a statement from the State Administration for Market Regulation.
Copper prices neared their highest in almost 8 years on Thursday as stockpiles around the world fell. The U.S. Federal Reserve promised to pump more money into markets and hopes for a U.S. stimulus package this week grew. Investors bought riskier assets across the board, sending global equities to new peaks, oil prices to a 9-month high and the dollar to its weakest since April 2018. Benchmark copper on the London Metal Exchange was up 1% at $7,914 a ton in official rings, nearing last Friday's peak of $7,973.50, the highest since February 2013.
Moving on to the top news in the Agri sector.
Tight wheat supplies in the European Union will limit its scope to win more export business this season after Russia's decision to impose a wheat export tax, consultancy Strategie Grains said on Thursday. Moscow will apply a €25 ($30.57) per ton tax on wheat exports from February 15 until the end of the marketing season on June 30 as part of efforts to stabilize domestic food prices. While the consequences of the tax are still unclear, traders and analysts expect a drag on Russian shipments.
Finally, we have the most recent news on the financial market. Britain has appointed the Intercontinental Exchange to host emissions auctions once the UK's trading scheme begins next month, the exchange operator said on Thursday. On Monday, the British government announced its plans for a domestic emissions trading scheme to replace its participation in the European scheme from January 1, after the country formally leaves the European Union. ICE has conducted auctions of British emission allowances under the EU ETS scheme since 2012.
That is all for today's news on the commodity market. Stay tuned to TradeFlow TV as we continue to provide you with more updates. You can also follow us on Twitter at TradeFlow TV1, which allows you to watch our program on your mobile device or desktop.